If you see a problem, you must fix it. We can no longer pass the accident on the road by like, well, not my problem. It is your problem. If you see something, you must fix it. Okay. You have to, no matter how small. If you're buying stupid amounts of plastic and you're like, this is kind of dumb, stop buying stupid amounts of plastic. It starts with you. It starts with things that you see in the world. If you're passionate about that problem, start a company. Right. So going back to plastic bottles, that was the origin of liquid death. They're like, wow, way too much plastic. Let's make water in a can. Aluminum's at least recycled. It doesn't wind up in the oceans. It doesn't wind up in your bloodstream. So if you care about a problem, start a company. And if you're interested in a problem set, start a fund. You can even go beyond that and say, like, if you care about lots of problem sets and have a lot of money, you should be investing in venture.
Hey everyone, welcome back to the Ignite podcast. Today, we're delighted to have the one, the only Adeo Ressi. He is the serial entrepreneur investor dedicated to transforming venture capital and entrepreneurship into forces for good. So we'll talk about that. He's also a CEO and co-founder of VC Lab and the Decile Group, which has helped to launch nearly half of all VC firms, including yours truly, in the last few years. So we're really excited to talk to him about that. He's had a really incredible career that spanned decades, and he's launched 14 VC funds. He's founded 11 startups. He has billions of dollars of exits. And I'm just so excited to talk to him today. Thank you so much for coming on.
Yeah, excited to be here. Lots of stuff going on in the world today. If you're not moving quickly, you're not moving fast enough, and lots of change happening in the world, from the government changing to private industry changing. So lots of topics for us to discuss.
I know. Why don't we start at the beginning, and maybe we can catch people up who don't know you in the next 5 minutes of like how you came to be the founder of Decile Group. Maybe walk us through your career journey. One of my favorite stories to tell about you is, as I was going through VC Lab, I'm listening to Walter Isaacson's biography, and he talks about Adeo and Elon throwing parties in New York. And I'm like, is that my Adeo? That's weird. But yeah, maybe you can walk us through like how you got to be in Silicon Valley and do so many cool things.
Yeah, so I've been around for a long time. It's been over 30 years that I've either been an entrepreneur or an investor. And like many people, the first half of my career was focused on entrepreneurship. And then the second half of my career was focused on investment. And I got very fortunate. So by the time I was 30 years old, I had two separate billion-dollar companies that I helped start, one of which got acquired by AOL and became AOL Digital Cities. And the other one was we took public. So we went through the whole, it was actually a reverse merger. So it was more like a SPAC, an early day SPAC, but we still managed to be public and worth $1 billion and go through the whole rigmarole of that. And I would argue at the time, actually doing the reverse merger into a public shell, which was like the modern day SPAC, was harder than actually going public directly. So in hindsight, I'm not sure why I did that, but I learned a lot of lessons. Coming out of that, I was like, all right, I've made tons of money. I'm not going to work anymore. I'm just going to dedicate my time to philanthropy and do nice things. I joined the board of the XPRIZE Foundation because Musk and I, who you had mentioned, I was college roommates with Elon. We're still very good friends. We were friends back then. We were driving back from my family house in Long Island, and we were just talking about what we're going to do next. I had my two exits. At the time, I was actually wealthier than Elon. That's not the case anymore. And he had just exited PayPal. And we were like, okay, what do you want to do? And what do you want to do? And we didn't really have an idea. And so we looked out at the night sky and I was like, hey, what about space? And it was a joke because it was dark out and we were driving on this dark stretch of highway. But we were kind of a little bit OCD, maybe, neurodiverse. And we decided, okay, let's figure this out. And many of that car ride was a first principles car ride. Like, why isn't it the domain of governments? Like, why is it the domain of governments? Because it's really expensive. Why is it really expensive? And we kind of like, it's a bunch of metal with some fuel in it and it goes up into space. How expensive can it be? Well, it is expensive, obviously, but a lot of our assumptions, we went around the world after that and debunked. And that's how I ended up joining the XPRIZE, and he ended up joining the Mars Society. But interestingly enough, on that car ride, we decided that Mars was the destination.
Way back then, 25 years ago.
Yeah. And
A
out of
car
that
ride.
came SpaceX.
Wow.
We actually started a company together called Life to Mars. And out of that came SpaceX and my joining the XPRIZE Foundation board. And then I was on the XPRIZE
That's
Foundation
with Peter,
board.
right? So Peter was the guy
Peter
on that. Yeah.
Diamandis, right?
Yeah.
And I was basically like their strategic director on a board level. And I had really pushed them to move beyond space and take the prize model into other areas, genomics, etc. That was a lot of my influence at the time. And what I realized in doing this, and sort of the classic investor dilemma, is that I was not actually doing things. I was just inspiring and helping other people to do stuff. And I said, I need to get my hands dirty and
Yeah,
get
you're an entrepreneur.
more.
You want to go back to building something.
Yeah. So, but I want to work on a higher level. So coming on out of the X Prize, where I had basically been inspiring teams all around the world, I said, this is great. The prizes may or may not be run. The things they work on may or may not see the light of day. I want to have a much more tangible way of doing things. So I got my hands dirty. I launched something called the Founder Institute. We actually worked with entrepreneurs in roughly 300 cities around the world, hands-on, face-to-face, in person. And I would travel the world and actually hit about 60 cities a year to meet with these entrepreneurs in person and really push them to make businesses that would change the world. And we created many billion-dollar companies, including Udemy and many others. And it was really rewarding, but kind of through this whole process, venture capital was broken. It was actually, in many ways, Elon and I together experienced how broken venture capital was, because with Tesla, he had some notorious investors kind of pull some shenanigans on the board that forced him to go public. And I was dealing with shenanigans on my board. And actually, Elon was on my board and he got fired from my board by venture capitalists who were trying to take control of the company. So if you
This is
can
kind of the old school
imagine,
venture capitalists where they're taking 20, 30% around. They're giving themselves all kinds of investor rights and control on the board and super voting and all kinds of shenanigans, right?
right. So this was back in the day when VCs weren't behaving very well. So out of frustration, watching my friends getting in trouble with VCs because of bad behavior, experiencing the bad behavior myself, the precursor actually to the Founder Institute was something called the Funded, which allowed entrepreneurs to rate VCs. And as a result of that rating, the VC behavior changed very quickly.
What happened to the Funded? Is that still around?
It succeeded. Basically, its goal was twofold: to stop the misogynistic bad behavior of many VCs at the time, which manifested in like just not showing up to meetings, you flying across the country for a meeting and then being like, sorry, I'm busy, touching female founders under the table. I mean, there was so much bad stuff happening in that, and that all stopped for the most part. It's not perfect, but it was really, really bad, and most of that's gone. The second thing was that VCs were actually just issuing horrifically unfair economic terms, like 5x participating preferred. There is simply no way that an angel, an early investor, or founder can make money in a deal with a 5+X participating.
So maybe
preferred.
for the audience that doesn't know what that is, maybe you could explain how onerous that is.
So if I put $10 million into a round, and there's a 5x lick pref, which is another way that these are called, participating preferred or lick pref.
Yeah.
Then I get $50 million out plus the 10 million that I put in. So it's technically 60 million before anyone else gets a dollar. Now, what ends up happening is, the numbers are much bigger than 10. I used a round number of 10 for easy purposes. Sometimes put 20 million, 30 million, whatever. You get a X participating lick pref, and it's very hard for an entrepreneur.
You might exit for 100, but so now this investor sitting with a 5x lick pref gets their 60 out. Now there's 40 left over. And by the way, they still own 20, 30% of the common.
Right. And then they get the rest of the 40 that's left over.
Yeah, they get a third of that. Yeah. So now they've taken 70, 80 million of the $100 million exit.
So, and then
$10 million
there were the lick prefs would be stacked. So you might have a Series B person with a 5X, a Series A person with a 3X. So founders never made any money.
That's
You'd
crazy.
really need to sell for billions of dollars. But what ended up happening is it created this really weird situation where you were a founder and you looked at the math and you're like, why am I working so hard?
So this was the
I can't.
backlash. So around the same time, and I had friends that did this. They're like, I'm not going to take venture capital. I'm just going to bootstrap.
Yeah.
That was kind of like one of the reactions. Or maybe I do the angel round, friends and family round, and I don't raise any more money.
So that ended up hurting venture capital really badly. It turned out that when we did so we actually went with the funded and with these initiatives, we stopped that 100%. We stopped it in two ways. So first of all, if this were the only abuse that venture capitalists were doing, that would be great. But they were doing a lot of other financial shenanigans. This is like stuff from like almost now it's like 18 years ago was the last time you saw some of these terms in a term sheet because they're so preposterous. Right. And so we eliminated them. But what we did in addition to that, in order to fight them, is we introduced this 10-to-1 voting rights of founders. I introduced what Facebook used and what most modern founders use to protect the founders. And that flipped everything. So now the founders were heavily incentivized to go and crush it. In fact, and this then happened, the most extreme example of this was what happened with Elon and Tesla, where the board is like, if you can get this to be an enormously crazy large business that no one thought was possible, we'll make you a multi-hundred billionaire. And Elon's like, great, I'll go do that. And so what ended up happening is these investors put these terms in where a founder couldn't make any money and then no one made any money, right? And then we said, look, this is ridiculous. Like, I don't want to work my ass off 20 hours a day and get to a finish line and walk away with nothing, which was what most of the economics in this period, call it 2002 to 2009. That's the worst time. It was there was a bell curve, right? We flipped it. All of a sudden, entrepreneurs could make tons of money because they controlled the board, because they had, 10x voting rights. So they not only controlled the board, they basically controlled the shareholder votes. And then they pushed really hard back on all these economic terms and got them to like a fair level. So they had control, they had fair economics, and then everything took off. And when that was fixed, we left the funded running for a little while, and then it's like fixed, so we shut it down. But then we went on, did the Founder Institute because of that, and we brought entrepreneurship to the world. So we brought all the knowledge that had accumulated in Silicon Valley, lean startup, business model canvas, all this stuff, opened in roughly 300 cities around the world, over 250 cities around the world, and basically trained people on how to build Silicon Valley style businesses. And that opened up markets in Chile, Colombia, Africa, everywhere in the world. And now you're starting to see amazing billion-dollar companies get started literally all around the world. And that's a direct result of what the Founder Institute did. But the problem with that is that the funded basically put a Band-Aid on a wound. And the venture capital was inherently broken. It was injured. And we kind of fixed it up and said, all right, guys, go on out there. You're a little better now. And it's like, look, if, I don't have a bloody arm and like a busted...
They still ran into these firms that had old ways of thinking in the later stages. So you kind of fixed the early stage, kind of the incubation 0 to 1.
We fixed it. We put a bandage on, or bandage, or Band-Aid, probably more like a bandage on a wounded soldier.
Dressing.
Handed them a gun and was like, get back out there.
Yeah.
Right? And they're like, yeah. And then, this massive Cartesian explosion happened because we fixed it enough, but we didn't fix it all the way. And so now it's reached as far as the wounded soldier can go. We've gone, and the problem now is that we're not seeing the same level of entrepreneurship and success that we should if the venture capital industry was functionally excellent, which it's definitely not. It's just a kind of bruised and bandaged soldier back on the battlefield doing the best that it can. It's not some like fresh recruit out of boot camp, fully trained with the newest gear. And so we want to, and sorry to use the war analogy, you can use any analogy you want. But so our goal is now to like re-equip and rebuild the industry for that next level of success and growth that we need to see worldwide. There are amazing companies in Africa that do not get the capital that they need to succeed. Africa is a known leapfrog market. It will leapfrog in healthcare. It will leapfrog in energy. It will leapfrog in many fintech models. And it's not being capitalized today to have those leapfrog effects the way it should be. We're going to fix that. Central Asia, lots of great talent coming out of that region with really no capital at all available to them. LATAM is starting to turn the corner with new capital and great companies. You're starting to see unicorns coming out of there. So we're going to just fix the capital markets because the entrepreneurship markets are ready and the capital markets need fixing.
And so VC Lab and Decile ultimately came out of this experience with fixing venture capital and the funded. So maybe you could talk about kind of the incubation period and how it became VC Lab.
We're frustrated with how little funding was flowing. And so the lack of funding in developed markets and other markets, there frankly lack of funding in places in the United States like Chicago or
Midwest, Southeast,
Detroit or Louisiana, or actually most of the country. It's a glass ceiling on the success of entrepreneurship. Okay. So you can only get so big. And then if you don't have capital to grow, you're going to get stuck, right? And so you may get angel capital and you can get as big as angel capital can get you. You might get a little bit of venture and you can only get as big as a little bit of venture can get you, but you have a glass ceiling. So what we realized this running the Founder Institute in over 250 cities, because there were like billion-dollar portfolio companies coming out of cities and countries with thriving venture capital ecosystems. And then there weren't billion-dollar companies coming out of places that didn't have it. And then if that were not enough evidence, because you could argue maybe there's some bias in the cities or whatever, we started venture capital ecosystems in Singapore, in Colombia, in Chile, etc. And then we would see billion-dollar companies. So we would be like, oh, we started the venture ecosystems and now they're billion-dollar companies. It's like, okay, there's an indisputable amount of evidence that thriving venture ecosystems equals much bigger outcomes for startups. And that was the genesis of Decile Group. We said, let's launch training programs to build venture capital firms in every major city and market in the world.
In a way, I mean, in hindsight, it's kind of like right idea at the right time, but you were kind of set yourself up over decades to get to that point. You were the right person at the right time. It was the
story of all good entrepreneurship, right? Like I was the guy. I had been looking at this when we started in, call it 2020, we started testing a program, right? And then we spun it out as a business really in closer to 2022. But we started kind of experimenting in 2020. At that point, I had been looking at how venture capital is broken for easily, 14 years. Okay. And then my whole life, but, it's squarely staring at venture capital and how to fix it for 14 years. Okay. And then on top of that, I'd been basically buttressing up against problems in venture capital, running the Founder Institute for a number of years as well. So I'd known the problem from all angles deeply.
So maybe you could talk about a little bit about what Decile is, how it came to be. I went through, in fair disclosure, cohort 7 of VC Lab, which is the accelerator program for new VCs that you guys run.
Yeah.
Now, I think you just completed cohort 17, which is pretty incredible. Congratulations.
Thank you.
I'd love to kind of hear
16 complete. We're launching 17 complete.
Launching 17, that's right. And so maybe you could talk about a little bit of what you've learned, because you've now launched hundreds of venture capital firms.
I'll tell you what we do and what we've learned. So when we were like, hey, wait a minute, there's this opportunity to start venture capital firms all around the world. Let's just try it out. It just exploded. And that was called VC Lab. And at the Founder Institute, every idea we had that was kind of experimental, we called lab. So obviously it was called VC lab because it was just a test, but it blew up way bigger than we ever thought. In fact, within a year of launching VC lab, it was 100% clear that VC lab would be bigger than the Founder Institute. And at that time, the Founder Institute had either 7,000 or 8,000 portfolio companies, I forget, but around between 7,000 and 8,000. And within 1 year, this thing was going to be bigger than this other thing that had been around for roughly 10 years and had a 7,000 portfolio.
Was it just the metrics of the applications and the quality applicants coming in? And
well, we had launched, a lot of firms and funds. And if you just said, okay, how many get to fund 2 and fund 3 and how many entities will they fund? They're actually going to fund more entities than we had created.
So instead of working individually with startups, you could work with VC firms to change the industry and back the startups.
And the VC firms fund about 20 or so startups per fund. Clear that it was going to be bigger. And then we said, okay, we got to spin this out. So we spun it out and it became Decile Group. And the goal of Decile Group and the goal of VC Lab from day one was not just to make more VCs. It was to make a better version of venture capital that actually made the world a better place, right? Because like you could fix venture capital, so what? And we'd have a bunch of like trinkets, more trinkets.
And that's not to say like all of venture capital was bad. There just were lots of bad actors, right?
I would say that I would argue most of venture capital is pretty bad.
So as I listen to the stories in Power Lie, I should just be thinking like, oh man, these guys had 3x lick pref.
Let me put it this way. Venture capital has been so bad for so long that and look, they're definitely within the world of venture capital. There are good actors and there are bad actors, but I would say it's like a 90-10 thing because the entire industry grew up with kind of more bad actors than good actors. And for a long time, the bad actors obviously did better than the good actors, and that caused more bad actors to happen.
Let me give you a bad actor thing I just faced, and you can tell me if this is still bad behavior or if the VC is justified. We had pro rata priced round, and the Series A investor is like, no, unless you have a 20K check size in this round, no pro rata. I'm like, well, I'm an early investor from 2 rounds ago, and I have pro rata. I should get my pro rata, right? They're like, no, you're not a major investor.
Well, that's generous compared to what other investors do. If Sequoia came in the deal, they would tell the founder, which is not an uncommon thing that happens, get rid of these guys, right?
Just
and then the
founder
founder has to figure, they're like,
wow,
we're ready to invest, but you got some trash on the cap table that I want cleaned out.
Wow.
Go clean it out. And then the founder's like, crap, I got to go talk with someone who backed me,
help me
early on and get them out of the deal. And they have to play their be like, please, I'll get you bought out for this amount. Can you take the offer? Because that's how we're going to get. Like, this is just like not.
That's ridiculous.
Exactly. Look, that's not even bad behavior. That's kind of, so what you just described and what I just described is unethical. It's not something I would be proud of, but it's very common.
Wow.
And I wouldn't even consider that to rise to the level of what I would consider bad behavior. Bad behavior today is, there's a long list of things, but, threatening founders. There's so much bad actor behavior around the time of an exit that everything we're talking about here seems like, schoolyard, kindergarten, schoolyard. Comes times to exits, forget it. People are like, I'm not signing unless I get something that I do. So I like to always ask founders, like, if you have 10% of a company and the company sells for $100 million, how much do you get? And everyone's always like, $10 million. I'm like, no, you have no idea, right? Because the day that $100 million offer comes, the knives come out and people are like, I'm not signing until I have the cumulative dividends and I want my dividends and, there's not enough money to pay for the dividends. So then I want extra. And look, I've been part of the game long enough. So like, I'll give you an example. Like I was in an exit recently and they forgot to account for our shares. Right. And so I was like,
like, where's my shares? Yeah. Where's the money? Yeah.
And they're like, oh crap. And so and they know, I have like a pretty wide open door to walk through and sue it and unwind the whole deal. So then I'm like, look, if you did all the calculations correctly, you would owe me $150,000, but you messed up. And now I want 250, let's say.
Well,
That
yeah,
type of stuff.
now you got to get a
happens.
lawyer and you got to like send letters and you got to do all this stuff, right? All this process.
In this case, we just did a friendly deal and got it done. But the real bad behavior of venture investors occurs at the time.
It seems to accumulate or cumulatively get worse the later stage, more money's at stake. Because like I don't experience this that much in pre-seed and seed investing. Everybody's
How
pretty
many
collaborative.
exits have you had?
I've had some, but not like $1 billion ones like you. Yeah.
Lemons ripen first, Brian. And so so if you get like $100 million exit, no VC's really making money on that. So they're not like whipping out the knives and with sharp elbows fighting each other over, they realize that it's scraps. So they kind of write it off, which is another whole problem, by the way, because if you have too small, I've seen this happen many times as well. If your exit is too small, your VC may not even be available to talk to you or sign anything, et cetera. I mean, you'd be lucky to get their attention. So it's not just, I would say the two worst scenarios for an entrepreneur with venture are when things are going badly or when things are going well. But God forbid it goes well, you have a whole other set of issues with your venture investors fighting over the returns and waterfalls. And they're like, the MBACA says this and that, and the preference stacks. It's really unpleasant to say the least. And so look, we're going to fix it. We're going to fix it all. Every single thing that is broken, single thing that is unethical, single thing that is unfair, every single instance of being treated wrong, we are going to fix. Okay. And so in order to fix it at that scale, and that's why we're doing this, we've created an accelerator to train people. We've created tools to help them run their firms and funds ethically and according to best practices. And we've created capital access so that they can raise money easier. So we call it training, tools, and capital. And the old way of doing venture capital is so broken that you can't take a practitioner and invite them into the new way. They'd be lost. We're working with new managers and recent managers to give them a better way and rebuild the industry from the ground up based on first principles.
Amazing. So what have you learned? How many firms have you launched? And what do you wish you knew in those first few cohorts that you know now? And
we've launched over 600 firms. And so most of that in the last 2 years. And so just to get, because we're roughly 3 years old. So 2002 is when we really got started. So 500 firms launch a year. So you can do the math, we're probably half or more of all new firms worldwide. And I mean, I learned a lot of things that were broken that I didn't realize they were broken. I learned that there are a lot of bad actors, and I didn't realize how many bad actors there were. So I'll give some examples of that. And then that's just been more fuel for us to fix everything, right? So for example, one of the things that was a big surprise for us is how slow and complicated the banking process was. And I guess I'd done it once or formed a bunch of funds, and banking took time, but everything took time. But once you start streamlining everything and you can reduce the time, you're starting to realize like, what are the things that take the most time? And it was like getting a bank account. That could, in some cases, take weeks or months, right? In America. Like, it's not like in Europe or China. It took weeks or months to get a venture capital bank account in America. It's like, what? So we've had to do a lot of work to streamline that. And then on the bad actor side, but there are lots of little things like that we discovered, like, wow, this takes a lot of time. We got to fix it. And then the bad actor front, basically, everyone's a bad actor. I was like, wow, it makes sense in hindsight.
You're talking about some of the people that they kind of feast off these new VCs that don't know any better. So they'll pay $50,000 to some law firm to set up their entities and they have no commits
For example,
yet.
Law firm, I'll give you kind of like one you can go research very easily. Florida is the largest back office provider for funds right now. sexual harassment, discrimination. I mean, the list of the unethical behavior.
Using your data for a business that
Yeah.
I did not give permission to give, to use my data in that way.
They market to your limited partners. If you put limited partners,
which is why I left AngelList, actually, very famously. Well, not famously in my mind. I was like, you can't market
they're
to my
better,
LPs.
but they have their problems too. But I mean, Carta is like, I mean, I don't just do your own research. The things that they are accused of doing, and they're like, we'll fight it in courts, versus Settle, because Settle admits the main reason they fight it is to dissuade people from filing, and the number of filings is stunning for a small startup to have that many lawsuits against them. I've been in business a long time. I mean, I had one lawsuit. Now, it was a horrible lawsuit, and the entire time, 30 plus year career, one. It's like constant stream. So you have unethical legal, unethical back office, immoral legal, immoral back office, the vendors, the brokers, everyone. And it kind of makes sense. It's like if the industry isn't that ethical, then of course all the suppliers and people selling into that industry can't be all that ethical either.
Do we need some sort of, I don't know, not SEC overwatch, but do we need some regulatory framework of like, hey, I know you're not a public market.
All right. So what about the trade association for the venture capital industry, which happens to be in America called the NVCA, the National Venture Capital Association? Okay. What about that? Well, the SEC was like, wow, our floor, which is really like the ethical floor, like, don't kill grandma, right? Like, okay, yes, I won't kill grandma, but can I kill grandpa? Like, no, don't kill grandpa either. Like, so they're like the floor of behavior, which was really, really crazy low. They're like, look, I think we got to raise it because there's some bad stuff going on. And the NVCA was like, no. They fought hard so that the SEC would not raise the floor. And then, so the SEC is like, okay.
When you mean raise the floor, you mean on the private markets, just raise the regulatory hurdles a little bit, basically.
Make it a twinge more ethical. And I'll give you a specific example in a second. So they're like, well, okay, guys, fine. We'll just raise it a little teeny weeny bit. And they sued them for raising it. You would think that the watchdog organization of the industry would be like, yeah, guys, we got to be a little bit more ethical here. We got to go to lose higher standard,
right? They have all the bad actors that pay fees to be part of that organization saying, hey, you got to block this. We don't want all this SEC oversight in our industry, blah, blah, blah.
So it's not oversight. These are like ethical. I wish it were oversight. These are ethical floors. So I'll give you an example of one of the most contested things fought over, blah, blah, blah. So the SEC is like, guys, so if I'm a GP, I can make a secret deal with an LP that affects the economics of other LPs in my funds, and it might affect the economics negatively, but it's secret. So other LPs don't know.
LP side letter, hey, I'm going to give you
side letters. Correct.
Yep. Yeah.
So I can do a secret deal with someone that hurts other LPs, and I don't have to tell them. And it's
probably
like,
not okay.
Wait a minute, that's not really cool. So this guy,
because all the other LPs signed some LPA and line 10,000 and that 200-page LPA, there's like something where side letters are up to the GP and then they may hurt your fund economics. There's probably some like arcane.
It doesn't even matter what the agreement says.
Yeah.
That too, and the law wasn't clear whether you have to say anything. SEC said, look, sign all the side letters you want, but if you sign something that affects other people negatively, you have to tell them. And people are like, no. It's like, well, okay, guys. Like, I mean, I don't even know where to begin.
It's pretty reasonable. Yeah.
I mean, that's fair. If I sign a deal that says this, but it's not true because you signed something else with someone else that changes the terms, but I don't know about it, like, it's only fair that I know what I'm actually agreeing to.
This episode of the Ignite podcast is brought to you by our friends at Build, spelled BYLDD. Build is a development agency that specializes in helping early stage startups especially non-technical founders and teams, build and launch scalable revenue-generating software products. Most startups don't have $100K to hand over to a big agency, and honestly, for your first product, you probably shouldn't. Sure, you could try rolling the dice on some freelancers, but that's a gamble with unclear costs and a lot of project management headaches and no guarantees. That's where Build comes in. For just $10K in about a month, Build can turn your validated idea into a real product that's ready to go to market. It's a smart, efficient way to build a foundation for a company of any size. And yes, companies that start with Build can and have scaled very large. Their clients have gone on to be backed by YC, Y Combinator, and Google, and raise funding at multi-million-dollar valuations. Ready to get started? Head over to build.com. Again, that's BYLDD, to connect to Ayush and the team and let him know you heard about Build on the Ignite podcast.
You've been a big proponent of the Mensarius Oath that all your new VCs take. And it's actually a great way on LinkedIn or Twitter X to know that somebody's in your program, right? Because you're like, oh, the Mensarius Oath, I recognize that. But maybe you could talk about what that is and why that's important.
Yeah. So as I said, when we started out, sorry to go crazy about the ethics.
I love
it
it.
really is just
Yeah,
very near and dear to my heart. And part of the reason it's near and dear to my heart is when we started out, we said, if we're going to fix this industry, we're going to rebuild it on a core code of ethics, right? And that's called, I can read you some of them quickly, but basically it's almost like the Mensarius Oath shouldn't need to exist because it's basically kind of saying the obvious, right? Like if you don't agree with the Mensarius Oath, like what's wrong with you?
Right.
Right. But
It's like a doctor agreeing to do harm.
right. It's like,
First, do
it
harm.
was based on the Hippocratic Oath. So, for example, integrity. I vow to invest with integrity, ensuring my actions benefit humanity and consciously avoid harm to other parties. Okay, no brainer. Excellence. I commit to maintaining the highest professional standards, setting an exemplary ethical benchmark in finance. Okay, one would hope if you're managing other people's money, you would have integrity and strive for excellence. The other ones are fairness, equality, respect, transparency, etc. And we just say, guys, if you're going to be managing other people's money, we want you to be ethical, and we don't want you to be at the lowest standards set by the SEC. Which
I won't break any laws would be like the lowest.
Yeah, it's like if you go below this, you're a criminal, literally, right? So we don't want you hanging out over here. We want you up here because this is venture capital. This is the highest form of finance where ideas are brought into the world by capitalizing them, right? We don't want you down at the bottom of the ethical level. Like, is it going to kill anyone? Like today? No? All right, we'll back it. Really? So we think that it's important. And let me tell you the bigger why. Okay. We are in trouble. All right. It's almost 70 degrees in February. It shouldn't be this warm. The planet's on fire. In some cases, proverbially, and other cases, literally. We're eating poisonous foods all around the world, ingesting plastic from the environment. We are tenuous state as humans on the planet. Period. End of story. And we can debate which is worse and which is better, but we're there. And we need to start fixing these problems. And governments have failed us. Corporations have failed us. Non-government organizations, sovereign wealth funds have failed us, right? So it's up to entrepreneurs and the people that fund them to build the solutions that we need to get out of these problems. And, I've been working on this for many years on the board of the XPRIZE, et cetera, and that there are definitely things that are helping, but they're really not at the scale that we need to be. So we need a double-digit percentage of global GDP, call it 20%, funding solutions by entrepreneurs that are going to fix the problems of the world. That's going to create an economic boom, because you're going to have all the industries that exist today that will be replaced by new industries. So you'll essentially double up. And these new industries will be better for humanity and better for our collective future. So it's going to be, if we do this right, which is what we're working on, then we can fix all the problems of the world and make lots of money doing it, right? We don't have to be all nonprofits. That's not the way this is going to happen.
That's why I stopped working on nonprofits like 15 years ago, as I realized that, technology is the only thing that can get us out, right? Because we can't live without technology. And when I came to SF, I wanted to work in solar. I worked in clean energy policy for the Sierra Club for the state of Hawaii. So I was already lobbying for clean energy and sustainability and, passing plastic bans and stuff like that. And then I kind of looked, what really sold me on it was kind of the exponential progress of technology, both that kind of like, stuff that Peter would talk about on his podcast, moonshots, or Kurzweil writes books about. And then I think it was Kurzweil actually made this point to me that, if we keep doubling solar the way we've been doubling it for the last 40 years, we'll have 100% solar energy. So we should kind of lean into that. I've never heard a techno-optimist manifesto so eloquently stated as you just stated it, which is venture capital can be that force for good that accelerates us towards technological solutions that are frankly the only way that we can get ourselves out of this mess.
Exactly. So your example of the doubling of solar, government subsidies can help, but if there aren't solar companies ready to install it and solar cells ready to be installed, it doesn't matter what government subsidies you have, right? So at the end of the day, the buck of changing things starts and stops with the entrepreneurs. You can't fund solutions that don't exist. So you need the entrepreneurs to create the solutions. Then you need the capital to get them to get to scale. And in some cases, you may need the government to provide incentives for those solutions to get to market faster, like the plastic bag ban. But one of the problems with the plastic bag ban is there aren't really that many great alternatives to plastic bags. Plastic bags are like infinitely reusable, blah, blah, blah. They get abused, right? And one of the issues why we see so much plastics in the market today is that there aren't, and you're just starting to see compressed mushroom-based solutions,
Seaweed kind of based.
Biodegradable solutions,
Yep.
And other things that can be used in place of plastic and starting to replace plastic. And that's largely been driven by entrepreneurship and the venture that funds.
Yeah, I love that. You're such an interesting person. You've lived on a commune, explored architecture, served on the board of the XPRIZE. You've had a tremendous amount of impact in helping companies get off the ground and founding all these firms. Like, how has that shaped your worldview?
My worldview really hasn't changed much since I was young. When I was 18, I made a conscious decision. You saw the problems of the world. And basically, it boils down to either you believe in humanity's ability to do better and essentially have a positive impact, or you kind of give up, a kind of fatalist, and move into this dark zone of where it doesn't really matter. Who am I hurting? I'm going to die anyway, right? And so I made the choice, essentially, if you look at that as a choice between dark and light, I chose the light at 18, and I've been working towards that ever since. And that's how.
Remember that aha moment for you? Like, what was that aha moment of?
It was kind of interesting because I had an idea, like, I could probably sell air. Like, people were bottling water at the time, and I was like, I could probably sell air. People are so dumb they would just buy air, right? Because they're buying water. You can get water free everywhere.
I've heard good things. When you put the oxygen on, it feels good, and you.
Yeah, so I'm like, I'm just going to sell air. But then I was like, okay, that's just preying on people who need to buy air. They have air everywhere, right? They're like, that's not really going to net help the planet buying air in the same way that we've probably done more damage to the ocean selling plastic bottles of water than literally anything else. And so, I had that catalyzed the thinking for me that, like, hey, you can work on things that are net positive or you can work on things that are net negative. And I decided, like, to be more thoughtful in everything that I do. The issue is that I've done a lot. I've definitely moved the needle in a lot of ways, but my God, we have a lot of work to do. We have not, it's like a spark in the darkness. Okay. And we've got to now light the world on fire in a positive way.
Yeah, we've been kind of rubbing the sticks together, and we kind of got it smoldering a little bit.
Yeah, there's been a little spark. We have a little progress, but we've got to now move because we're in trouble. And I don't think people realize how dramatic the trouble is, but it's going to get progressively worse faster. So all these things that the climate scientists, as a simple example, said would happen in the early 90s and even late 80s didn't happen. It's like all happening now, right? And so maybe they were off by a decade or two, but it's definitely happening.
Right.
And they also said it would accelerate. If you then look at like what did they eventually say would happen? It's like holy crap, like
Yeah.
melting ice caps and glaciers around the world and Antarctica for that matter, rising sea levels, that stuff is happening, right?
People will
And
be
if
able to sell seawalls.
well, they're looking at building a seawall around Manhattan, but it won't be able to really stop it, guys. We have to move, right? So here's my thought for everybody. If you see a problem, you must fix it. We can no longer pass the accident on the road by like, well, not my problem. It is your problem. If you see something, you must fix it. Okay. You have to, no matter how small. If you're buying stupid amounts of plastic and you're like, it's kind of dumb, stop buying stupid amounts of plastic. It starts with you. It starts with things that you see in the world. If you're passionate about that problem, start a company. Right. So going back to plastic bottles, that was the origin of liquid death. They're like, wow, way too much plastic. Let's make water in a can. And aluminum's at least recycled. It doesn't wind up in the oceans. It doesn't wind up in your bloodstream. I'm sure there's issues with aluminum touching water. There's all this stuff about cooking with aluminum, etc. But like better than plastic, right? So if you care about a problem, start a company. And if you're concerned, if you're interested in a problem set, start a fund, right? And that's what I would say. And then, you can even go beyond that and say, like, if you care about lots of problem sets and have a lot of money, you should be investing in venture.
Yeah, I love that. You're kind of infamous for inventing the safe. Maybe you could tell a quick story about that and how that came to be and what a safe is.
Yeah, hopefully most people know. So over half of all funding rounds today, I think it's like 70% safe notes. And basically, I invented them. It's like I gave it to Y Combinator, who popularized the safe note. So what happened is around the time where all this bad behavior was going on, we finally kind of ended all the bad behavior. The FX participating lick pref deals we talked about earlier. And then what everyone started doing is there was no easy way to fund companies. So people just started issuing convertible debt. And every deal was a convertible debt deal. It's like, didn't matter if it should be a convertible debt deal or not, it was a convertible debt deal. The problem with convertible debt, it's a very bad vehicle to finance most startups with for many reasons. First of all, it's securitized. Many times startups, especially software startups, they don't have any assets. So what are you securitizing against? Nothing, the founder. And it can only be out for 2 years and then you have to renegotiate. So it's a super problematic vehicle. And at the time, 70% of all deals were convertible debt. So I said, look, it's great that we fixed funding, but now we got to make sure that people get funding in a smarter way. What can we do? And I sat down with a bunch of lawyers and came up with this idea of it's a convertible financing round without debt. That's what the safe note is. It converts to preferred equity in the next round, but it doesn't have a security behind it. It's not debt. It has no instrument. Because I was like, look, if you have debt on a software company, what are you going to get if it goes out of business? Nothing, right? You can get the code, but like, what are you going to do with the code, right? You could get a chair. Do you really need another office chair? No. So we invented this safe note and it took off, we thought it would probably be good for about half of all financings. About convertible debt would be 25%, and then 25% would be price rounds, et cetera. And it took over like wildfire. And so the reality is it's overused. It should be used less than it is, but it's a great vehicle, very easy. So happy to see that it's popular.
Looking back, are there things you wish you would have included in kind of the standard safe? One thing that I've run across that I started including in my side letter is a conversion trigger. So the safe doesn't sit out there indefinitely. Like I have the right to convert it to preferred. Otherwise, the founder could just start paying themselves dividends.
Yeah, I mean, look, There's a lot. The SAFE is not meant to be the ultimate financing vehicle of every startup. It's meant to be used in select circumstances, maybe half of the time, right? So it's widely overused right now. And frankly, when something's used where it shouldn't be, it therefore is by definition being abused. But with that said, I think as a vehicle for what it does, it's fine the way it is. There's a pre-money and post-money SAFE. You should use them selectively. I won't go into too much detail, but they're different. But I've actually already fixed the problems of the SAFE that you're alluding to with a new vehicle that I haven't released yet called the ACE. It's much, much better. Fixes all the problems that remain in venture capital. The issue is it's got to be pretty widely adopted early because it's a fundamental change in how venture capital works. And so we're about ish percent of all VC firms use our platform, and about half of all new firms we've started. So we've got a pretty big reach. And when the time is right, when we have a little more reach,
Interesting.
we're going to release this, and then
Well, we'll do another podcast. We'll have somebody, either you or somebody on the team, come talk about that when it's ready.
It is ready. It's just we want to be an indisputed leader of all things venture capital, which we're kind of pretty close to it.
You're on the path. Yeah, you're on the path. Yeah,
but we're not quite there. And so when we cross that tipping point, then we'll release the ACE and fix the remaining issues, at least from a legal structural standpoint with venture capital.
Oh, that's exciting. What other innovations do you see reshaping venture capital or early stage, mid stage funding coming up?
So much stuff. I mean, it is one of the most exciting times to be alive, full stop. And if you're a founder, it's one of the best times to be a founder. If you're an investor, it's one of the best times to be an investor. I mean, every single problem facing venture capital today, we are going to fix, because most of the remaining, outside of the ethics, which we're already fixing, most of the problems that are happening in venture capital are because it's a cottage industry without lots of transparency and liquidity, right? So there's a huge issue with secondary positions, right? And secondary, like, for example, so if you're an LP in a fund and you want to get your money back, forget about it, right? Not going to happen. It happens here and there. Even funds are like, I've been in this fund for 10 years. It's my time's up. I got to try and sell. They can't sell. And it's because there's transparency and liquidity issues in the market. And as you start to have a common platform, which we're building, and we're adding transparency on top of that, then you have liquidity. You have the ability for venture funds to co-invest together, to do all sorts of things that just weren't possible in the past are possible now. And we're going to fuse that possibility to fix the remaining issues in venture capital, providing GPs with liquidity, LPs with liquidity. Because of how kind of intransparent and secretive funds have been, it's created this weird thing where you go pitch money to invest in your company. That's the way you think that's the wrong way. If you have a good company, money should come to you, okay? And you're the beneficiary of this. We flipped the script with LPs. LPs have money to invest in venture firms, and we've now made it possible for the LPs to find GPs that they want to invest in, and LPs come to you, and you've seen that work, right?
Yep.
We're going to do that with startups. So very soon, if you're running a startup and you're doing well, VCs will come to you, okay? You no longer will have to go out and pitch them. They will come to you. And they'll say, hey, you're in this area that I'm really interested in. You have traction that meets my requirements. I want to invest in your company, right? And then you're going to be like, wow, yeah, we have great chemistry. It's been great to meet you. I want you as an investor in my company. And so the days of entrepreneurs going out and knocking on doors and getting 100 no's for one yes are going to soon be over, where the VCs go to them and the entrepreneur picks the investor that's best suited for their business, and they have chemistry and they work together to build a brighter future. And that's a big change that will come probably this year.
Wow. And so looking out over the next, 5 or 10 years for Decile, what are you excited about? What's kind of the vision for the future?
We're taking the company public. So we're going to run modern venture capital on our systems. We're going to help launch most of the best venture capital firms in the world. And we're going to invest in and take economics in the upside that they generate. That should produce a business that's generating hundreds of millions of dollars a year in revenue with billions of dollars of book value. And then we will take this public as part of making venture capital transparent and allowing retail investors for the first time in history to really own the asset class of venture capital, which they're prevented from doing today by antiquated laws. And there's some hope that these laws will change, but it's extremely unlikely because they're not just in the US, they're literally everywhere in the world. And so the best way to get retail investors to be able to participate in the success and the change that's coming in the world is to have a public company that's governed by the rules of transparency in the public markets. And you can invest in that company and invest in the future of humanity.
I love that. Very cool. I wanted to quickly touch on building high-performing organizations and teams because, I interact with Decile and the whole team over there frequently, and I'm just always impressed by the level of commitment and hard work that I see. Maybe you can talk to other founders out there and talk about how you build that, like a high-performance culture like that.
Well, look, there's a lot of things that need to be done to achieve a high performance culture. But I'll tell you what, and there are a lot of ways to achieve a high performance culture. And I have my way, and I know there are some other ways, and I like my ways, and I have respect for other people who have different ways. So my way is that I have a big, ambitious, ethical goal. And if you agree with that goal, if you agree that finance is a means to make the world a better place, then you will either work with us as a manager in one of our programs or come join the company and work with us as a team member. Okay. So we start with an ambitious ethical goal. Okay. And then we give people a lot of autonomy in their role and try to make sure that people have a relatively decent work-life balance. I'm not going to say it's perfect. There's definitely times where we're crunching, right? But we're not trying to live in a boot on your neck, work until you can't work anymore environment. We try to have, and it's a hardworking, fast-paced culture with top-tier professionals, but we also make sure that if you want to have a vacation, you can take vacation. If you need time off on the weekends, you can take time off on the weekends, right? That doesn't mean there isn't crunch time as well, but we try to keep that balance. And I know a lot of people with high performance cultures, they don't care about work-life balance, but then you can't get some more experienced people who don't want to work 20-hour days, 7 days a week, right? You can only have younger people in that type of environment. And we want to have a mixture of younger and older people. And that's also why we're remote. Now, on top of that, right? So that's all great. We have the big vision. We have this culture that allows people to succeed. We're very meticulous about someone who's on the team. So either you're an A player and you're on the team, or you're not an A player and you're off the team. And it's no hard feelings, right? So we do a lot. We kind of hire slow and fire fast, right? So if people are not at the level that we need them to be, and it's not necessarily like working 20 hours a week.
Do you give them like a warning, like, hey, when we hired you, we expected A and we're kind of getting B, and here's the gap, and you kind of give them a chance
a little bit differently. We do a 1-month trial period. So we say, look, come on, we'll pay you full boat. Sometimes we even pay more. We'll give them more. But it's 1 month consulting, essentially. And it's a trial period. And
with an option to convert.
Yeah. And, for lack of better phrasing, our internal thing is if it's not a fuck yes, it's a no. So
that's exactly, yeah, I love that. If it's not a fuck yes, it's a no.
Right. So at the end of the month, if we're not like, this person is amazing, I can't wait to work with them more. Every day with them makes me better. Every day with them is a pleasure. Then we're like, part ways. And we're now over 40 people, and we probably do the work of, 100 people. And
Easily.
it's not
Yeah.
because they're working 20 hours a day. It's because they're really just great.
Yeah, I love that. It's how we think about growing Team Ignite as well. We start everybody as interns, obviously, and we haven't hired anybody full-time yet, but by putting people on the 30, 60, 90-day contract period, you really don't know somebody. You can hire slow, but I really don't feel you know somebody until you've worked with them for a few weeks. That's when you can start to see the glaring either positives or negatives.
Right. And so, and we've gotten to the point now, for example, in test projects, in our hiring, we do screening, test project, more interviews, and then they come in for that 1 month trial period. And we definitely, not everyone makes it through the trial period for sure. But
What's the
even
conversion rate from trial to full-time?
Yeah. I don't know, somewhere like below 50%, but not
Wow.
like 20. But back to the point. So we even at like the very first test project we give someone, we're like, use AI. All right, go ahead. In fact, nowadays we're putting the AI for them to use in the project, and we're like, go ahead, because if they're going to use it anyway, right, we might as well give you the right AI to use, right? We want to see how you think about things, how you interact with stuff, right? Not how you can cheat with AI. Everyone should be using AI, right? So how do you think about things? What?
Or you put them in an artificial thing where it's like, okay, now I'm going to require you to think on your feet in a way that you won't really need to. If you're working and interacting with people, you'll kind of get to stop and consider it and have a discussion with AI and think about how you're going to.
Look, AI is the future. We're
we
building
use
it in everything that we do. We're probably the market leader, and every day goes by, we're like,
you're constantly, I see it all across the Decile platform. You're constantly like putting it in here, there. It's like, it's everywhere. It's infiltrating everything.
The issue is that they're AI first businesses that are like, whoa, so we're trying, it's going to be very difficult to be running a company and not disrupted from here on forth.
Right.
So either you are on the bleeding edge yourself, or you are going to be disrupted. So, we made a pretty big decision not even 2 months ago, where we're going to start developing products with AI, and then, they don't necessarily need to be integrated into the platform right away. If they're good enough, they can stand on their own, and we'll use AI to develop products. We'll use AI to improve the products.
Service the funds. Do the fund to funds thing, everything. Capital connections.
Yeah, we're going to be, and look, and here's the thing, and this is for all the entrepreneurs that are listening, but also for all the investors. Basically, if you're not using AI, if you're not on the cutting edge of what AI can do, you will be disrupted. Okay. And when I say disrupted, I mean put out of business, sadly.
Absolutely. So why don't we wrap up with a rapid fire? Or it's more like a rapid-ish fire, because these end up being really good conversational starters. What's the most exciting startup you've seen this year, and why?
So obviously, I think we're really exciting. So I'm not looking at startups every day, but I can tell you the AI code stuff, and particularly Replit, I'm just blown away by. There is no BS there. It's not perfect. And I don't know that it will be the winner, because it's got enough imperfections that like Grok 3 could come out and it could be disrupted by someone who builds on Grok 3, right? So, but that sort of AI code generator space, with Replit being a market leader, is something I'm very excited about.
Yeah. What about venture capital fund or firm that you've seen come through the program or you've interacted with that you're really excited about, besides Team Ignite, of course?
Elon's taking us to Mars, which was our first company, was called Life. Elon and I started a company called Life to Mars. He said yesterday in the X.AI launch webinar, whatever that was, or he's launching gear for humanity in the next launch window, which means that humans are 4 years away from being on the surface of Mars. We need space funds now, because 4 years is not a long time, right? If you want to get a fund off the ground and fund things to have on the surface of Mars and on the moon, etc., If you don't have a fund now, that's not going to happen. So I'm very excited that that's happening, but it means we need funds backing space right now.
That makes me want to do a more generalist fund for my next fund so I can invest in some of that stuff. Because historically, I've done a lot of B2B software, marketplaces, fintech, AI.
You
But
need
like,
expertise though. It's not,
yeah,
it's going to be, that's an area. And this is why specialized managers are very important. You need specialized expertise to invest in things like that, because there's definitely a lot of minefields and things to avoid. Other rapid fire questions.
what's one book every entrepreneur should read?
Boy, I think the Eric Ries books are pretty good as a starter. I don't think if you understand the lean startup model, then maybe you don't need to read it. But if you're just starting out, it's a great framework. And it actually has held the test of time. A lot of people are like, it doesn't matter anymore. But actually, I would say it matters in many ways more in the world of AI, because you just want to get started fast as you can, use AI to figure stuff out, and then launch and learn.
That's been one of the best things I've seen as an investor is the AI has kind of lifted the floor of what's possible. People can iterate faster and get to market faster than ever.
You can't believe some of the stuff I've managed to build in hours.
Oh yeah, I had a story like that where I kind of basically took Airtable and their integration with ChatGPT, and I built something an engineer he was struggling to build it. I was like, well, I just did it with Airtable and some API calls. How would you define success for a venture capital fund?
I think if you achieve your thesis and greater than a 3x TVPI and preferably a 3x DPI, that to me is success in venture today. Hit your thesis, X or greater, preferably DPI, but TVPI is fine. And you're going to be building potentially an enduring firm.
What is your favorite city for launching startups? You've been around the world. You've seen a lot.
That's a difficult question to ask, because there's cities that I like Berlin, that also have great startup scenes. Obviously, still the best place in the world to launch is Silicon Valley. But because of the work we've done at the Founder Institute, you can create great companies now anywhere. Cities like Berlin are viable, whereas they weren't really that long ago. For me, you can do it anywhere. So it's really up to you. But one of the more advanced places to do it that I personally like is Berlin.
Beautiful city. Last question. If you weren't in VC, venture capital, what would you be doing?
We have a lot of work to do on the environment. So I'm going to go hands-on after we take the company public and we get traction to being in the field. I want to go to Superfund sites and other just catastrophic environmental disasters like the Aral Sea, and just hands on the ground, get them fixed one by one.
Well, thanks so much for coming on. Really enjoyed the conversation. Where can folks find you online and find out more about Decile and VC Lab?
I'm most active on LinkedIn. Just search Adeo Ressi on LinkedIn. This is great, Brian. Thank you so much. You got me heated up and charged, which I love. And I'm a little late to my next meeting, so let me jump.
All right. Thanks so much.